Hey Kyle, are you there?
Scott, can you hear us?
I can hear you just fine.
Good.
I didn't actually have a link for police, so you had texted me and asked me what happened.
Very good. Thank you.
Is Virginia actually there with you too?
I am.
Hi, Virginia, this is Scott. I
Hi.
didn't mean to step on your toes on the Zoom link. I
Oh,
just thought it would be helpful. Um, and we would interfere with the city less or take less of your time if we publicly noticed, but we just used our account so that you would have that information in advance.
and that would definitely, I don't have a problem with it, but from my understanding, they connected that to the city clerk duties to make sure the Zoom link went out that way. So I really personally, me, don't have a problem with that, but not to try to undo what they've already established for the city clerk and our account. Um,
I understand. I just wanted to apologize and
right.
because,
No, yeah, I think it was just an oversight. She did not actually put them out there, which is why you didn't have them. Because we had to go in and schedule the meetings. They weren't there. I know
I
she had
know, but
surgery on her hand,
in the
so.
future, then it's going to become three Zoom links on each quarterly meeting date. So it ends up being an additional task for somebody else. And I was just hoping to save you that.
Right, okay.
So I also wanted to say thank you.
Are you back? Oh. Okay, we could start with that. Yes. You gotta teach me all over again.
You got this.
All right, it's, oh, I'm so glad. Thank you. Now, remind me, Brett, now what do I do? I say, bring it to order and hit it.
Yep.
And then we start.
No, you don't hit anybody with that.
Trying
Then we
not
start.
to.
They pretty much take over the meeting.
Yeah, okay. Thank you. Thank you, Brett.
Yes, ma'am. We'll
Appreciate
have to
it.
approve the minutes, so. One of the first things we do.
Yes, I saw
Yes,
it.
ma'am.
And I say, has everyone had an opportunity? Okay.
Since it's with an assistant, you just try and get the attorney on the line.
Okay.
Hi, I'm here.
Oh, there you are. Very good. Thank you.
No problem.
There we're all set.
Okay.
Do I need full roll?
Well, first I need to bring it to order, right?
Mhm.
Hit the thing.
Yeah,
We bring this meeting to order.
got my attention.
So the meeting has been called to order. Go ahead, Ms. Cowell.
Thank you, Chair. Marcia Cardy,
I'm here.
Alan Bush,
Here.
Brett Dennis,
Here.
Chantel Pierre. Chair, we have a quorum.
Excellent. Can we proceed with the meeting? The first item is the approval of minutes. Have everyone had an opportunity to review the minutes? May 27th, 2025.
I'll make a motion that we approve as written. Second.
So moved. Okay,
All those in favor?
all those in favor?
Aye.
Any nays here? They are not here. So it has been approved. Can we move forward with Mr. Michael Brennan with the BCA report?
All right, good afternoon. I'll quickly start. So I have a few handouts for you. The first one we'll go over is an updated investment policy statement.
I saw it.
All I've passed out is just a red line version of what we're changing. And so you'll see at the very bottom of the front page, adding section 3. And this is language from the state per legislation regarding prohibiting direct investments in companies or firms that boycott Israel. So again, not something we have control of. It's been requested by the state, so we need to add it to our plan. The good news is it shouldn't impact any of your investments, or it certainly won't impact how we manage your funds. But again, just state directed, so wanted to make sure we update and are in compliance with that per state guidelines. So I will pause and allow you to review it, ask any questions, and then make a motion to approve.
I just have one question.
Yes.
This is not retroactive, it's effective like today or.
Yeah,
present.
so when it's approved, it'll go into effect in 31 days, I believe, 30 or 31 days, it'll be effective. But it's not changing any of your investments or anything like that, so it's just going forward. Say we were to hire a large cap manager that invests in individual stocks,
Mhm.
they would have to acknowledge this language and make sure that any of the investments they're directly buying are not boycotting Israel. So to my knowledge, the only large name that you might recognize is Unilever. They own Ben and Jerry's, and that was a company that was boycotting Israel. So that would be an example of a security we wouldn't be allowed to hold directly.
Okay, no further questions.
Is there a need to vote for this report? To
Uh,
accept it? Or
Yes, yeah, you'll have to move it and vote on it just to approve, assuming you don't have any issues with adding link.
can we have a motion?
I'll
please?
make a motion that we approve this amendment
All
to our
in
policy.
I'm sorry.
No.
Any questions?
No,
All
second.
in-
Second.
Okay, cool. And then that's when I say any questions after the first and second. All in favor? Any questions before I say all in favor? All right, all in favor?
Aye.
Aye.
Thank you. It has been moved and approved.
All right, thank you. And we'll get a signature on the final IPS after the meeting. The next thing I have for you is this handout. And this is just a quick update. So it's actually been quite a while since we met. We missed the second quarter report, which I'll cover just briefly. And then obviously the third quarter report ends in September 30. So a lot has happened since the end of September. So this market overview covers kind of what's been going on in the market since the end of September, as well as a little bit of forward looking, what we can expect or hope to expect going forward. So on page 2 of the handout, you'll see this chart right here. And this is an update on markets through the week ending November 21st, so the week before Thanksgiving. And what you'll see is we had a great October. Markets performed very well. However, November rolled around and markets started to trade lower. The big reason for that, and you'll see in a few slides, is a lot of the large tech AI-driven companies have gotten very expensive. Their valuations are what we would call a little bit frothy. And I think investors have taken notice of that, and we've seen those sell off over the past couple of weeks. So NVIDIA is the big name. It's led markets the past few years. They're the big name in the AI semiconductor space. They sold off by about 15% from their all-time highs recently. A name like Tesla, who falls in the Magnificent Seven, so that's those 7 large cap tech growth companies that have led markets the last couple of years, sold off by about 25% from its all-time highs. And so you'll see in this chart for the week ending September 21st, right in the middle, the markets were down about 2%. Now, fortunately, you know, the first 3 days of last week when the markets were open, we rebounded significantly. We were up close to 4% last week alone. Excuse me. So as we sit year to date, the markets are up about 18%. So the S&P 500 is up about 18%. However, you know, looking forward, we are a little bit worried. We started to get some labor data that was a little bit delayed by the government shutdown that's showing the labor market's a little weaker than we had expected. But contrary to that, we saw Black Friday and Cyber Monday spending increase year over year. So Black Friday, $6.4 billion were spent. Cyber Monday, $11.8 billion were spent, which were all increases and all-time highs. However, what's interesting when you dive into the numbers a little bit, we actually saw order volume. So the number of purchases made was actually down 1%. And so how do you get record high sales with lower volume?
Increased prices.
Exactly. And so what we saw is the average selling price was about 7% higher than last year. Some of that is inflation, some of that's tariffs. And so we'll talk a little bit about that in some upcoming slides as well. The next page, page 3, as I mentioned at the top of the market, we are getting a little bit expensive. And so in that box, you'll see the second line down, forward PE. PE is price to earnings. So that's how much you're willing to pay per dollar of earnings for companies. And so that multiple, you'll see at the very far right of that, 22.9, so about 23 times. That's saying right now investors are paying $23 per dollar of earnings for the S&P 500, the index, which is expensive. It's actually higher, so it's a higher valuation than we saw in the previous 2 market peaks in January of 2022, which you'll see just to the left of that last column, and then February of 2020. So again, we're starting to get more expensive, and that's why we're seeing a little bit of volatility in the markets as people uneasy paying these valuations. Now, the good news is if we go all the way to the far left, in 2000, the dot-com bubble, we're not up to those valuation levels right now. So that's speculation. We're certainly not at that level of exuberance, which is a good thing to see. And if you look at the next page, those top 10 companies, so it includes the Mag 7, which is NVIDIA, Alphabet, which is Google's parent company, Microsoft, Apple, Meta, which is Facebook's parent company, Amazon, and Tesla. Those 7, along with JP Morgan, Broadcom, and Berkshire Hathaway, those are the 10 biggest companies by market cap in the S&P 500. They now account for over 40% of that entire index. So there's 500 companies in there. Those 10 account for over 40%. So again, it's got a very top-heavy market right now. The good news on that chart on the right-hand side of page 4, you can see their market share, 41.6%. Right below it, their earnings, so how much earnings they're contributing in the index is at 33%, which that's a very strong number. So they're contributing about a third. Again, not quite this up to the 40%, but much different story than what we saw during the dot-com bubble, when a lot of those high flyers with high valuations didn't have the earnings and sales to support those valuations. So here, there's a little bit of support for how highly valued they are. And we saw the reason last week rallied is we got NVIDIA's earnings for the quarter. And they announced they beat on sales, they beat on earnings, and they beat on expectations going forward. So they're expected to, the market was expecting them to produce about 62 billion in revenues for the fourth quarter, the quarter we're currently in. They set the expectations at 55 billion. So they've rallied last week based on those outperforming expectations. They're setting a high bar for themselves, so hopefully they can keep meeting those standards. The next page, page 5, the benefit of your portfolio, we have a mix of actively managed and passive or index funds. Index funds have been very hard to beat. Part of it is because, like I just showed you, there's a large concentration, and most active managers aren't willing to hold 10% in one company. From a risk standpoint, that doesn't seem prudent to them. Well, the market holds what the market holds. And so names like NVIDIA and Apple and Microsoft all garner, 5 to 15%, depending on what index you're looking at, of the index exposure. And the good news is the markets are very dynamic and change pretty frequently. This chart here on page 5 shows the top 10 by market capitalization in the S&P 500 going back each decade. So most recently, 2025, back to 1505, 1995, and 1985. And the one thing you'll notice here is there's significant turnover in that top 10 on a decade by decade basis. So if you look back to 2005, only Microsoft is still in the top 10 as we sit today. And even looking back just 10 years, only 4 of those names are still in the top 10. JP Morgan, Berkshire Hathaway, Microsoft, and Apple. So the Broadcoms, Teslas, Meta, Alphabet, Amazon, NVIDIA, those are all new entrants into the top 10. NVIDIA is the largest company in the world right now. They weren't even in the top 10 years ago. So by having exposure to that index, you're also investing small pieces in some of these smaller companies like a Palantir that you may have heard of that are making huge moves. And who knows, in 2030 or 2035, may find themselves in the top 10. One last interesting fact on this page, if you look at that 2015 column, you'll see the entire size of the S&P 500 by market cap was about 3.2 trillion in 2015. There are now 4 companies larger than the entire market was 10 years ago by themselves. So
Why?
NVIDIA, the largest one, 4.4 trillion.
Why?
Just the growth and prevalence of technology and AI.
Technology.
Mhm.
Yeah. Okay.
Yeah, and so Apple, NVIDIA, Alphabet, and Microsoft are all north of that 3.2 trillion
Wow.
in assets. And Tesla just recently became the first automaker to eclipse 1 trillion in market cap. So not Ford, not GM, Tesla. So again, I think that's one of the benefits of using the approach of blending both active and passive. The active managers hopefully hold up a little bit better when markets sell off. They have the higher quality names in their portfolio. But when markets are roaring and we don't know where the top performers are going to come from, the index takes advantage of that by having exposure everywhere. So interestingly enough, the Mag 7, which has led markets the past few years, only 2 of them are actually outpacing the S&P 500. So Google's up about 67%, NVIDIA's up about 34%, the market's up 18%. All the other ones are up between 15 and 5% year to date. So we are seeing some broader performance in the markets, which we like to see. We don't want to see the markets carried by 1 or 2 names every year, which we have seen in 24 and 23. And there's 25 companies that are currently outperforming Google. So Google's the 26th best performer in the S&P 500. So we've got 25 other companies that are outperforming it year to date, which again is a little bit healthier of a market than just 1 or 2 names doing very well. Now, if we flip to the economy on page 6, just want to quickly highlight the labor market. I mentioned that we have started to see some cracks in the labor market. Again, we've had delayed reports because of the government shutdown on federal labor data. So we finally got September numbers in a week or 2 ago, and it did show an uptick in the unemployment rate. We went from 4.3 to 4.4, which is still a healthy number. Anything under 5% is considered full employment. So we're still well within that, but we certainly don't want to see that continue to trend up. Additionally, we saw continuing claims for unemployment benefits jump up to nearly 1,974,000, and that was a new cycle high. And so again, that just goes to show that maybe the labor market is not as strong as we had suspected it was, and gives a little more support for the Fed to potentially start cutting rates more aggressively. So the Fed has cut rates twice this year. There's an expectation we'll see another rate cut this month in December, and then 2 or 3 more rate cuts next year. Now, the Fed's mandate is price stability, which is inflation and full employment. So if the labor market's weakening, it gives them support to start cutting rates. However, on the other side, if inflation and prices remain high or increasing, that supports the other case where they should remain neutral, not cut rates until prices start to come down. So again, a little bit of a conflict there in their mandate, because we have seen inflation continue to tick up, as we showed with the Black Friday and Cyber Monday pricing. But also we'll get into tariffs, which have also had their impact on prices in the next couple slides. Page 7, and there's just 2 more charts here, but page 7, just wanted to quickly highlight the U.S. economy is driven by consumption. Over 70% of our GDP comes from consumption. And so one thing we're keeping an eye on is the consumer continues to be burdened by debt. So if you look at the bottom right-hand chart, we've seen auto loans, delinquencies for auto loans, credit cards, and mortgages continue to tick up over the past few years. The big jump we've seen recently has been student loans.
Yeah.
And so if you recall, student loans were put on a moratorium during the pandemic, and that lasted up until this year in May, when the Federal Student Loan Office started to collect on defaulted student loans. And you can see that orange line in that chart. It was roughly about 1% defaults. It's jumped up to over 13% considered in delinquency. And not just past 30 days, most of them are considered seriously delinquent past 90 days, because that clock didn't start in May. It started whenever they paid their last payment. So it could have been 2020 or 2021. And the interesting thing is, at first glance, you would suspect this is really just impacting probably younger adults in their early 20s, early 30s. It really covers the full age spectrum. There's a significant portion of 40 and 50-year-olds that are still paying off their student loans and falling into that delinquency bucket. So again, that's just one other area of debt that's burdening the consumer, where they're having to allocate to these paying off credit cards, paying off student loans, paying off their car payments. That's not going to be going into the economy. It's just going to pay down debt. So certainly something we want to keep an eye on.
But right now, student loans can't be discharged, right?
The forgiven, is that what
No.
you're referring to, or?
No, if they file bankruptcy, that can't be discharged, is what I understood.
Yes, I believe so. I know the new administration was kind of changing some of the stipulations. So one of the issues is there was certain programs where if you went into public service,
Right,
Right.
you could get your loan forgiven after a certain time period.
right.
They've done away with that, and they haven't replaced it with a new program yet. So, but I do believe you're correct that you're
It's
not
becoming
able
more
to-
and more of a problem, and it's not going away.
correct.
Yeah, okay.
Mhm. Yeah, so certainly something we want to keep an eye on, because if, the consumer is not pushing the economy forward, that could mean some turbulence going forward in the markets. And then lastly, obviously the big buzzword for this year has been tariffs. But what I will say is, first, there was an expectation that we would see a significant increase in prices from tariffs. We haven't seen the extent that we expected. And part of that is because there's a disconnect between the statutory rate, so the rate that's stated by the government and the administration, versus the effective rate, what we're actually paying. And so if you look at this chart, you can see, April 8th, that was Liberation Day, when they came out on the White House lawn and had all those huge tariff numbers. The statutory rate that day was 30% on average. Now we've not come anywhere close to that. And part of that is we've postponed or been in deal negotiations to reduce and set up trade deals. But again, it caused quite a panic in the markets. And so we actually had a money manager we met with. He called it Obliteration Day, not Liberation Day, because of the turmoil it caused in the markets. But what you can see, the actual effective rate is in that box at the very top left-hand side. The last line under January, February, March, going all the way to August is the effective tariff rate. And you can see it's significantly lower than what that statutory rate was in April. We actually only had a effective rate of about 6%. Now, it has been increasing each month. As of the end of August, we were about 11%. But again, that's still well below the new stated rate at the end of September was about 19%. Still quite a gap between 11 and 19. We're hoping that it stays at 11, maybe comes down a little bit, because at the end of the day, we're the ones who most likely end up paying some of those tariffs. So some companies will eat a little bit, but again, they're beholden to their shareholders, and earnings are top of mind. And so they're not going to eat those for an extended period and cut into their earnings and see their stock prices fall. The other news that we've seen recently is lower courts actually deemed the tariffs illegal under the IEPA, so the International Emergency Economic Powers Act that the president justified the tariffs with. It was found illegal. So now it's in appeals at the Supreme Court. So we won't know, at least through the end of this year, probably early next year, whether they are legal or illegal. But what we have seen is several companies start to sue the government. And the reason for that is they want to extend the period which they can receive refunds if the tariffs are deemed illegal. So the big news was yesterday, Costco actually announced they're the latest and biggest company that's actually suing the government because of this. And really it comes down to, they want to extend the period which they can calculate what tariffs they've paid and receive a refund if they are deemed illegal. And it creates an interesting problem because say Costco they're deemed illegal, they get refunds for these tariffs. Well, at the end of the day, if we shopped at Costco and paid, we're the ultimate ones that paid for it. So how will we end up receiving refunds as well? Or will Costco just have a big jump in their bottom line because they received a big refund from the government? So again, we have some time to see how this plays out. But certainly something we'll keep an eye on and keep you informed about. And then lastly, so that's one of the reasons I think we're not going to see tariffs rise significantly over the next couple of months is while this is being litigated, I don't think the administration is going to announce new or higher tariffs anywhere because of having to potentially unwind it. But also we reached a 1-year trade deal with China in November. So that was really where we're seeing most of the tariffs impact was with imports from China. And so we reached a trade deal with China for 1 year in November. And so I think that'll also help mitigate some increases in tariffs that were expected. And so with that, we'll see what the Fed decides to do. Again, they meet in a few weeks. It's expected there's a little bit better than a coin flip probability that they will cut rates again in December. And then the expectation is another 2 or 3 rate cuts in 2026. So that certainly does help the consumer. Lower rates will help lower mortgage rates, lower auto loan rates. And so that will hopefully be a benefit for the consumer if that does take place. With that, I will conclude the market update and just pause for any questions before I jump into the June 30 report. I'll just cover your performance for the quarter, and then we'll do a little bit deeper dive for September 30, your fiscal year end.
Okay.
So with that, we can just quickly jump in. You have 2 reports. One on the front says June 30. So we'll go to that first, and we will just look at page 6. And I will page 5, and I'll quickly highlight here the first bullet for the quarter ending June 30. The plan earned 1.6 million or 7.2%, 7.1% net of investment fees, which was right in line with your strategic model at 7.3. You ranked in the top 23rd percentile of other public pension funds across the country. And your best performers were your actively managed large cap growth fund by Voya. It was up 18.6% for the quarter. Then your index fund for large cap growth, the Fidelity Large Cap Growth Fund, was up just under 18%. And then UPAC, which is your actively managed international, it was American Funds Euro Pacific Growth. They changed their name in August to UPAC, EUPAC. That was up 13.4% for the quarter. So fantastic quarter. And the good news is we can close that report and jump into the September 30 is you followed up one good quarter with another. And so if you go to page 5 of the September 30 report, and this ends your fiscal year, remember October 1 to September 30 is your fiscal year. For the quarter ending September 30th, you earned another 1.4 million or 5.9%. And right in line with your strategic model, which was up 5.9%. And you actually did even better on a
Wow.
ranking standpoint, ranked in the top fifth
Fifth.
percentile of other public pension funds.
Compared to 23rd
Mhm.
in the prior quarter.
Yeah, so continuing improving. In the big performer here, large cap growth did well, but your best performer was actually your convertible bond fund. It was up 11.6% for the quarter, followed by your index fund and large cap growth up 10.5%. And then small cap, you're in the Spider S&P 600 small cap was up 9.2%. And I'll pause there. That's a great number for small cap, 9.2%. However, if you flip back to page 3 in this report, you'll see at the very top, in those blue bars at the very top, the
Yeah.
first one is the S&P 500. It was up 8.1% for the quarter. The
Mhm.
next one, the Russell 2000, that's another small cap index that we look at. It includes 2,000 names instead of 600. It was up 12.4%. So our small cap index underperformed. What's the difference between the 2,000 and the 600? The 600 has criteria that companies they include in their index have to have positive earnings for the most recent quarter, as well as on average for the past 4 quarters. So it's a higher quality index. They have to be profitable companies they include. The Russell 2000 does not have that criteria. Roughly 40% of the companies in the Russell 2000 are considered not profitable, so have negative earnings. Those are the companies that rallied last quarter. So
I was
that's
just
a
gonna
3%
say.
difference. So
Right,
while I'm disappointed we didn't generate that 12% return,
right.
I think
Didn't take the
with
risk.
potential volatility on the horizon, I'd rather be in a higher quality index with quality companies
Hmm.
than a riskier, more volatile index like the Russell 2000. So, but again, something we'll keep an eye on. If it's a continual trend where the 2000 continues to outpace the 600, then we may make a change there. But right now, I'm certainly not recommending that. And then back on page 5, the second bullet for the 1 year. So this is your entire fiscal year. You're in 2.5 million or 11.4%, and just trailed your strategic model, which was up 11.8%. Ranked in the top 21st percentile and led by your large cap growth index fund, which was up 25.6%. Your large cap growth actively managed fund, which was up 24%. And then the iShares convertible bond fund, that was up 22.4%. So again, fantastic fiscal year. For the 3 and 5 year periods, you're in 8.3 and 7.9 million. The reason you earned a little bit less over a longer period, keep in mind 2022, we had that negative year where we lost money.
Right.
So that's included in that 5 year number. But for the 3 year, you annualized returns of 14.3%. And then for the 5 year, annualized returns of 8%. So very happy to see that. The last bullet here you'll see, and you'll see this in the report, you had a negative cash balance at 9/30. So keep in mind, this is just a snapshot. We take everything as of 9/30. So there was a disbursement of benefits and expenses on 9/30 that overdrew the cash account. It was settled the next week. So there was no issue, but again, it always looks a little weird when there's a negative number for a market value. So wanted to give you that context. And then if you flip over to page 9, wanted to highlight, these are all the numbers I just went over, except for the far right column. So we can go back even further. I went over the quarter 1, 3, and 5 year numbers, but for the past decade, you started with 16.7 million in total assets 10 years ago. You've paid out 6.2 million in benefits and expenses over the past 9 years on a net basis. So that includes contributions and then what you've paid out. You've generated 14.4 million in investment gains. And so we finished the quarter just shy of 25 million in total assets at 24,858,000 with annualized net returns of 7.5%. And then if we flip over to page 13, at this time, no recommendations to make any changes in terms of your asset allocation. We're pretty much in line across the board with all your targets. So on page 13, you'll see those gold bars.
Mhm.
That's our target allocation as spelled out in the investment policy statement. So that's what the number we want to be allocated to. And it'll fluctuate depending on what the market does, where we may be underweight or a little overweight. And so you can see here, slightly overweight US equities, slightly underweight cash because of that negative, that distribution in September 30. But otherwise, you're pretty much right in line with everything. So we're comfortable with that positioning right now. And we'll revisit again next quarter should we need to make any adjustments. The next page, if we go to page 16. This highlights at the very top your total fund performance, followed by the strategic model in the gold bar. And then below are all the individual investments that you have allocations to. And so at this time, no recommendations to make any changes. You can see right in the middle of the page that SPDR SPDR S&P 600 small cap ETF. As I mentioned, the difference in return there is those unprofitable companies in the index. One thing that I may look at next quarter and bring a recommendation for is your actively managed large cap value, which is right in the middle, the Virtus Ceradex Large Cap Value Fund. It's an actively managed fund. It struggled a little bit. You can see here, it underperformed the benchmark by about 1% for the 1 year period, but it's been in line across the board, a little outperformed in the 3 year period, a little underperformance in the 5 year, and then right in line for the 10 year. I think there's some other great large cap value managers out there that do a good job and may complement it well. So depending on what their performance looks like next quarter, I may bring a recommendation to take about half of so about 1.5 million, half of their allocation, and fund a new large cap value manager that complements them in some of those periods where they do underperform. But other than that, again, very happy. Your index funds have done extremely well. If we look at page 17, no issues here. American Realty Advisors, your private real estate fund has rebounded, so it was up 4.5% for the 1 year period after a few years of private real estate underperforming. So happy to see that rebound. The only other area that we may look at is your bonds, the Virtus Sykes Total Return Bond Fund. It's been right about at the index in terms of performance. And so another thing I'll look at next quarter, maybe bring in some options that can add a little bit of outperformance where they've kind of just really been at the index. But other than that, no recommendations this quarter. Just a few thoughts that I'll leave you with as we look forward for next quarter and starting 2026. So with that, I will conclude my report and just open it up for any questions or discussions.
I have a question.
Yes, sir.
The minutes reminded me that we had made we took a recommendation of changing from Euro Pacific Growth to Fidelity International Index. How did that perform?
Yes, so you can see that on page 17.
Yep.
We split out the about half of UPAC to the Fidelity International Index.
Okay.
So it performed in line with the index, which is developed markets, that MSCI EFI. UPAC actually outperformed for the quarter. And the main reason for that, if you flip all the way back to page 3, the third and fourth bar at the very top, the MSCI EFI, you can see was up 4.8% for the quarter. Right next to it, the MSCI Emerging Markets Index was up 11%. So that index we invested in is just developed markets, so it excludes countries like China and India. Those countries outperformed in the fourth quarter. Euro Pacific will hold anywhere from 20 to 40% of their portfolio in emerging markets. So that's what led to their outperformance. So again, that's part of the reason why we didn't do a full map over to a new fund, because we're not market timers. I'll be the first one to tell you that. We don't have a crystal ball. Longer term, Euro Pacific has been an outperformer. They've struggled recently. And so we wanted to add a little bit of index exposure so you were at least getting the market return and part of your portfolio with the upside of keeping Euro Pacific for quarters like this where they have the potential to outperform and add some value there. So, from a timing standpoint, I'd say, it wasn't ideal that the index underperformed, but we got the index return, right? So you didn't lose money.
Right.
We just didn't make as much as if we would have stayed entirely in UPAC. So, but great question.
Okay.
So, can we make a motion to accept the report?
I'll make a motion to accept the report as given.
All in favor?
Aye.
Aye.
No nays? And it's been accepted and approved.
Thank you.
Thank you for the report. Financials would be the next item. Oh, well, actually, Resource Center, I believe.
The attorney goes next.
Okay. Oh, all right. I'm sorry.
Hello, good afternoon. I apologize. I'm having an issue with my camera, so I cannot get it to turn on. I'm sorry about that. I just have a quick reminder. I have already reminded Kyle about this, so she's certainly aware. But December 15th is the deadline for the Chapter 112 Florida statute report that is now required. This is something that was implemented in 2023 and it is done every other year. So December 15th is the upcoming deadline. In order to be in compliance with this, Kyle will upload a form that we have provided for her along with your recently updated investment policy statement. And that should satisfy this requirement. So Kyle is certainly aware. You do have that updated investment policy statement that was just accepted today. So the form that we provided and that new statement will be uploaded and there shouldn't be any issues with that. Just wanted to make you all aware that your providers, are on top of this requirement.
Thank you.
We did not meet last quarter. The other two Palatka funds did move forward and instruct my office to put together a set of operating rules. Those rules were brought to the other meetings today. There are going to be some additional changes before those are voted on. If you would like me to do the same for this board, I do highly recommend it. A lot of the information and work has already been compiled, so it would be likely split time money wise with the three boards. It shouldn't be difficult to get those put in place. I certainly would recommend it. It really streamlines our process, keeps us doing things as we should, but of course, ultimately a decision by the board.
So we would like to accept that.
Okay, excellent. So I will,
Have a motion to-
Yes, I would think we should. Can we make a motion, please, to accept?
great. So I
The
will have
items.
those for your review for the next meeting.
Okay,
Oh, motion to accept the guidance from the attorney Anna Klausner Parrish.
I'll second the motion.
all in favor?
Aye.
Any nays? Motion has been moved and approved.
Thank you. That concludes my report for today, unless there are any questions.
Anna, we do have a
Yes.
copy of the summary plan description and the proposed ordinance available on the screen. I know you can't see it. They were
Okay.
provided to the board for the last meeting.
Okay.
And the ordinance is for the plot and the summary
Yes.
plan description. It's if you'd like to continue with that or wait until the corrections or additions are made.
Yes, let's wait, because hopefully we'll be incorporating the plop into the SPD as well. So let's keep that on. Once I know that that has been approved and adopted by City Council, I'll make those changes so that they're reflected in the SPD.
Okay, thank you. Then we'll bring them back with the no impact statement on that also from the
Yes.
actuary.
Yep,
Thank you.
perfect. No problem.
So we can move on to financials, please.
I can go first for the resource centers.
I keep skipping you. I'm so sorry.
No worries.
Go ahead, Resource Center.
In the packet, we've got a copy of the memo on the SOC 1 Type 2 audit.
Yes.
This is something we're very proud of. It's very labor intensive. 18th consecutive year without any exceptions.
Right.
And a copy of the certificate is in your packet also. My next item is not in your packet and I'm looking for some direction. I've sent out the first group of alive and well letters. We have had 87 people reply. 5 of them have moved and we do not have a forwarding address. And I'm looking for some direction. The people who have not replied and we didn't get anything back, I just sent a second letter, a second request saying that you need to reply. I need something notarized that you are still with us. 5 people have moved and I have no way of contacting them. And other plans, what they do is turn off their pension payments.
That gets their attention.
That gets their attention. So I was looking for the board's direction on how you'd like me to proceed with the 5 people.
They're required to update you, is that correct?
That's correct.
Okay, and this would get their attention.
This would.
I'm in so much agreement with you.
It seems rough, though.
I think it's quite direct and it will solve the issue.
Right,
Because-
and you've already reached out to try to
Correct,
correct
correct.
the situation.
And this combats the fraud. And we've had people collecting pensions for up to 2 years
Right.
when a person has been deceased.
Good point.
I got you.
So, and it's very difficult to collect that money back and cost the board money and hiring attorneys. So it is drastic, but it does save the fraud.
Right.
How long have you been trying to get in contact?
The 5 people that we had there, no forwarding address was just the 1 letter, but there's no sense mailing a second letter if they've moved and there's no forwarding
It's not
address,
forwarded.
because it's been so long since they moved, the mail will not be forwarded.
I have a out of the way question. Do we, just a question. Do we do things like skip trace, that kind of thing?
I don't know what that is.
Oh, right.
Sorry.
Okay. So there's a way, there are websites that you can go on and you type the name of the person and so forth, and they will actually search nationally where this person may now be located.
Is there a fee for it
It's
using?
a small fee. It's like $39, things like that, not enormous.
Mhm.
But I just wanted to bring that to
We
your
use the
awareness.
national databases for death notices. When someone passes away, the bank usually notifies us. So we know to contact the next of kin or the
So you're
beneficiary.
using that.
So we are using that already.
Just to be clear, the letters are not going to them so that a written check wouldn't go there. These are direct deposit folks?
That's correct.
Got
They're
it.
all to direct deposit.
Got it, yeah.
So I do have other accounts that the parents have passed away and the children just take the
Continue
money,
collecting.
Just
Yeah, I
Right.
get that.
keep
That's horrible.
collecting. It is
Do you need a vote? Or just
just
a
direction from the
recommendation?
board to go ahead and
You
turn
can
them
do-
off.
I'll be the hard guy.
Okay,
You normally are.
I'd say let's get their attention, please.
okay.
I agree. Okay,
And that's all I have. We can go into financials.
all right. Well, please move forward. Would that
I
also
have-
be you?
Yes, I have the income and balance statements just for you to receive.
Yes.
There are 2 different warrants in here, the one from the last meeting, which is August 26th
Mhm.
and December 2nd. I can take one motion for both of them if you'd like to approve the financials.
So the financials that I see here. Okay, but I want to look at, what about the statement, before we go to
Sure,
that one?
certainly.
The statement of fiduciary net position, you don't want to talk about that at all?
They're just for you to receive.
Mhm.
These are just the numbers, so you know what's going on of what's coming in and going out.
Okay, and then I see the warrant payment of
Right.
invoices.
Then there's a cover sheet for the August one. You've received the full packet in the previous meeting.
Right.
And then the
December
one
2nd.
for the December 2nd.
We do have to approve the payment of the warrants.
Yes,
I
you do.
thought so.
You were right.
So we have not even, in essence, we have not approved the ones for August,
You have not.
right,
They need to be ratified.
as well.
Yes,
Right.
please.
Well, I'm sure someone would like to
I'll
make a
make-
motion of some sort.
Make a motion to pay the warrants dated Tuesday, August 26, 2025, in the amount of $25,291.
You can also do the December one at the same time if you'd like.
And the warrants from dated December 2nd, 2025, totaling $13,464.58.
Is there a second?
Mr. Bush, would you like to second it?
That famous voice.
I'll go ahead and second the motion.
Okay. Oh, he did second.
Okay, I'm sorry.
Okay, thank you, Mr. Bush. It has been, you know, second. All in favor?
Aye.
Aye.
Any nays? There are no nays. It has been moved and approved. Is there, can we move on to number 7 then? Benefit approval?
Yes.
Um,
We also have two groups, the August 26th
Yes.
and December 2nd.
mhm.
Mr. Bush is part of that benefit approval, so
Okay.
he will need to recuse himself from the vote. And I will send him the voter establishment form to sign.
We understand that. Thank you. We are currently reviewing the benefit approvals. We also will have to make a motion as well, correct?
Correct.
I can ask questions.
Certainly.
So these are people that are qualified to start receiving benefit payment.
Correct.
Okay, so before they start getting the payments, we have to approve.
Well, they've already received the payments.
Okay.
This is a ratifying
Oh.
their, God bless you, their refund
Excuse me.
or their disbursement.
Okay.
If they have a drop account, and they can periodically ask for some money from that drop account, those distributions are also recorded.
Okay.
But if you have any questions on any of the distributions, please ask.
So we're ratifying August 26th
Correct,
and we're approving December 2nd.
correct.
Can we have a motion, please?
Motion to ratify benefit approvals from the August 26, 2025.
All in favor?
Aye.
The ayes have it.
I think we got a second out of turn. Should I make the motion a second?
Yes, please.
Okay, I'll make a motion to second the, your motion.
Okay.
You have
He's not
to
able to vote.
abstain.
Right, because he can,
Okay.
right, he's, right, yes, so therefore, good point. Thank you for
Thank
the
you.
observation.
Do I need a second or?
No, no, we will not do that creativity here. We will not do it. We'll abstain. Okay, all right, so we have a motion and a second.
Mhm.
All in favor?
Aye.
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 And we have to sign these as well, is that correct?
Yes,
Now, who signs as secretary?
I had you down as
Okay,
secretary.
so she signs and I sign.
Correct.
Excellent.
Okay, thank you. All right, we will take care of that. Any public, can we move on? Did you do the one for October 2nd as well?
December 2nd. No, I did not.
Because I only heard you do August
Okay.
26th.
Right, because you said we needed to do something different for December. We needed to approve.
Oh,
That's what
okay.
I heard. Is that right? Or
Right.
we ratify?
You need to approve the today's 12/2s has to be
And we
approved.
ratified. August
Ratified the
2nd.
old one. Correct.
Motion to approve benefits dated December 2nd, 2025.
A second?
All in favor?
Aye.
And it's been moved in second and therefore approved.
Thank you.
You're welcome. Are there any public comments from the people we cannot see?
No public comments, Chair.
Thank you.
You gotta ask.
You have to ask. And are there any other businesses? Any other business?
I had a quick item. The other two boards have requested an FAQ to distribute to members about their beneficiary forms and applying for pensions or questions around it. We're going to produce an FAQ for each one of those boards, and I would like to offer it up to this board.
We of course accept it.
Perfect, thank you.
Okay.
The other item is for the training that's required. There are different conferences available. The one from the state is a no-cost one, but I offered to the other boards as diversification of training. There's an organization called FPPTA, Florida Pension Training, that they do. They have specific classes, but there is a cost to join. The other two boards, one is going to ask for more information. The other board would like to join them. If you'd like more information on what they do and what classes, I could send it to you in between meeting. And then next time we can vote on if you'd like to be a part of it. A lot of times they have meetings in Orlando area, so it's not very far for you, but they're really great classes specified for trustees. So if you'd like that information, I'll send it to you.
Please.
Perfect. That's all I had, Chair. Thank you.
Okay. If there are no other business to discuss or consider, I would like a motion for the meeting to be adjourned.
Motion to adjourn?
Second.
All in favor?
Aye.
Aye. I could say aye to that. The meeting is adjourned. Thank you.